Business Studies Class 12, and now in this video, this is lesson 9, financial management, and hopefully this is the last video of this lesson. And in last video we have studied about the fixed capital and the factors affecting fixed capital. In this video we are going to study about the working capital and the factors affecting working capital. So first let's see what is working capital. So student, working capital, it refers to the funds required for the day-to-day operation of an organization. Means whatever the amount of money is required for daily operation, it is said to be the working capital. Then apart from the investment in fixed assets, every business organization, they needs to invest in current assets. Means as we know that every business, they require fixed asset like land, building, plant and machinery. Apart from such investment, even day to day, there are certain expenses of day to day. So when the organization, they need to invest in these current assets, which can be converted into cash or cash equivalent within a period of 1 year. Means when there is a current asset, when it is converted, which can be converted into cash or cash equivalent within a period of 1 year, it is said to be your current assets. Clear? Now let's see what are the factors affecting the working capital requirement. So students, these are the certain factors which affect the working capital. So what are the factors? Nature of business, scale of operation, availability of raw material, growth prospects, level of competition, inflation, business cycle, seasonal factor, production cycle, credit allowed, credit availed, and operating efficiency. So let's see all the points one by one. So the very first factor affecting working capital requirement is nature of business. The basic nature of business enterprise influence the amount of working capital required by it. Like a trading organization needs lower amount of working capital as compared to manufacturing organization. Student, nature of business we have already discussed in fixed capital also. Nature of business means either the business it is a trading organization or a manufacturing organization, any one out of these two. Trading means which are just selling and where only sale and purchase is done, and manufacturing means when a company, they are manufacturing the product and then they are selling. So definitely when one organization, it is manufacturing, so definitely working capital requirement of manufacturing organization will be more than that of trading organization. Clear? Then comes your scale of operation. An organization which is operating on large scale will require more inventory, as its working capital requirement will be more compared to a small organization. Student, as you know, the scale of operation means either the company, they are, or the firms, they are operating at large scale or they are operating at small scale. So when definitely when the company, they are operating on large scale, they will require more of inventory, and when they will require more inventory, definitely working capital requirement will be more. And if the company or organization, they are they are small, so they are operating on small scale. So for small scale, definitely small inventory is required and working capital requirement will also be small. Then the third factor is your business cycle. When there is a boom in the economy, more production will be undertaken, and so more working capital will be required during that time as compared to depression in the economy. So student, you know, there are two in the economy, there are two types of cycle. One is boom and the another one is depression. So during boom period, what happens, that the market is flourishing, there will be more demand of your product, and when there will be more demand, definitely the organization, they have to produce more, and for producing more, they have to keep more stock, which mean more amount of working capital is required. But when there is depression, means low demand. When there is low demand, less inventories to be maintained, and so less working capital will be required. Then the fourth point says about seasonal factor. In peak season, demand for a product will be high, and thus high working capital requirement will be more as compared to lean season. Again, there are two types of season. One is peak season and the another one is lean season. Peak season means when uh, during season, means certain products, certain product are of seasonal nature. Like if we talk about sweaters, so sweater is generally we used to wear in winter. So in winter time, what will happen? The demand for the product will be high, and when demand will be high, more working capital will be required. And when the lean season is there, means like as I had taken example of sweater. So in summer or in monsoon season, what will happen? There is no requirement of winter clothes of sweaters. So what will happen in uh, depression period? Sorry, in during off season or during lean season, what will happen? The demand will very low, and so less working capital will be required. Then is your production cycle. Production cycle is the time span between the receipt of raw material and their conversion into finished goods. Working capital requirement will be higher in firms with longer processing cycle and vice versa. So student, first of all, just it is necessary for us to understand what is production cycle. It is the gap. Production cycle is a time period when the raw material is converted into finished good. So what will happen when the time period is more? Like now today I have purchased some raw material, then I am working on it, and it is the processing has been done. Then after say 15 days or 10 days after, the finished goods are done. I've done with the finished product. So in this case, what will happen? Working capital requirement will be higher, where the organization whose production cycle is more will require more of working capital, and the organization where production cycle is less will require less of working capital. Different firms allow different credit terms to their customers depending on their credit worthiness. So let's understand what does credit allowed means. When the company they are selling their product on credit, okay, not on cash basis. So what will happen when the company they are selling the product on credit? So in such a situation, they will require more of working capital, and if the company is following strict or short term credit policy, then they can manage even with less amount of working capital. Then the next point is credit avail. Just as a firm allows credit to its customer, it also may get credit for it from its supplier. So credit avail means when the company they are availing credit facilities from the means they are getting credit from the supplier. If supplier of the raw material they are giving long term credit, then definitely the company they can manage with less amount of working capital. But if the supplier they are giving only short period of credit, then the company they will require more of working capital to make payments to the creditors. Then next is your operating efficiency. The firm having high degree of operating efficiency, they require less amount of working capital as compared to the firm having low degree of efficiency. So efficiency means that if the company they are efficient, means less of wastage will be there, and when it means when the company they less wastage will be there, then what will happen? Then the company will require lesser amount of working capital, and when the company they are not efficient, then what will happen? Then there will be more requirement of working capital because wastage will be more in that case. So the efficient company will require less amount of working capital as compared to the less efficient company. Then the next point says availability of the raw material. If the raw materials are available freely and continuously, lesser amount of working capital is required, and if the lead time is more, larger shall be the amount of working capital required. Means when the raw materials are easily available, means now you need not to store the raw material, and whenever the raw material is required, you can manage it. So in that case, what will happen? The working capital requirement will be less. But when the procurement of the raw material, when the time period is more in procuring the raw material, then what will happen? Then the larger amount of working capital will be required. Then the next point is about, sorry, the growth prospects. if the growth potential of a concern is perceived to be higher, it will require larger amount of working capital. Means when there are certain growth prospects of the company, means when the company they can see that in near future there are certain growth prospects, for that what will happen, they will have to increase their production, and for increasing the production definitely the working capital requirement will be more. But if there is no such growth prospect, then working capital requirement will be less. Clear? Then the 11th point is level of competition. Higher level of competitiveness necessitate larger stocks of finished good to meet urgent orders from prospective customer. When there is more competition, then what will happen, means now you have to be more, you have to be much alert. Now you have to maintain large stock of product, so that whenever there is order, whenever there is requirement of a product, it should be delivered to their prospective customer as soon as possible. So in that case, large stocks has to be maintained. Large working capital is more working capital is required. But if level of competition is less working capital will be required. Then the last point, the last factor which affect the working capital requirement is your inflation. Inflation means with rising prices, larger amount are required even to maintain a constant volume of production and sale. Inflation means what? When the prices of the product is increase. Like suppose there is ABC manufacturing company, and the company they are manufacturing say bread manufacturing company is there. Okay, then the for making bread, flour is needed. Now suppose today the company they are purchasing say 100 kg of wheat flour at the rate of say 10 per kg. But when there is inflation and the price of wheat flour, it will increase say suppose 11 rupees per kg. Then what will happen, for purchasing the same amount of means 100 kg of wheat flour, the ABC company they have to spend more amount of money, larger amounts are required now for purchasing the raw material, and the raw material for bread manufacturing company is the wheat flour. So what will happen in that case, larger amount of working capital will be required. But in case of means when the prices are the same, so in that case what will happen, the working capital requirement will be less. So student, this is all about the working capital and the factors affecting working capital. So I hope I made it clear to you all, and that's all for this lesson 9 financial management. And student, please do like, share and subscribe the video. And as I always ask you that if you have any problem regarding any topic, any point, you can ask me through comment box. So thank you and take care.